Our final panel, our speaker for this panel brings the unique insight of a small business leader who has had to deal with the dysfunction of an economy that is at the mercy of self-regulated banks. Geoff Fader is the chairman of the Tasmanian Small Business Council and the past chairman of the nation's peak small business lobby, the Council of Small Business Organisations of Australia, or COSBOA. Geoff also served as the chair of the Rural Financial Counselling Service in Tasmania and chair of the Rural Financial Counselling Service National Network. He's spent many years advertising for small business bank victims, which involves navigating the legal minefield in which banks have all the power. Under Geoff's leadership, the Tasmanian Small Business Council has endorsed the post office bank policy, and Geoff testified that support to the Launceston hearing of the Senate inquiry into bank closures in regional Australia in October 2023. So please welcome Geoff Fader to speak on how banking self-regulation has failed Australia.
Good afternoon, ladies and gentlemen. I feel it's a privilege to be here today to share the platform with so many eminent speakers and those with perhaps far greater academic skills and knowledge that I might possess. However, I have a long history in business. I'm an oldie, 86 the other day, so that means that I've been fortunate to enjoy more than 50 years in business, almost entirely in the small business area. So thank you, Craig, and thank you, Citizens Party, for allowing me to address you this afternoon. Banking self-regulation has failed Australia. The Citizens Party has asked me to share my experiences and knowledge of how banking self-regulation is failing Australia. Some of my comments have legal orientation, so I advise you that I do not have legal training. I am not offering legal advice. Our information has been obtained from 16 years of research into bank relationships with small businesses, primary producers and consumers. It is a sad tale and a disgraceful indictment of public administration in Australia. As commercial organisations, banks are expected to operate in their own best interests. They are also obliged to comply with the law. Given the banking sector's power and influence, it is reasonable to expect that banks operate ethically. Governments provide mechanisms to ensure good behaviour, and our government would have us believe that the regulators are effective. Unfortunately, our regulators fail this test. This is not because they need more legislative power, it is because they refuse to act. First introduced in 2003, the Code of Banking Practice is crucial for ensuring fair play and ethical behaviour. It also claims to provide a mechanism for independent oversight of banks' operations. The Australian Securities and Investment Commission, more widely known as ASIC, although some on the stage today would possibly have a different description, reviews and approves the code every 4 years. The code contains a process for internal supervision by the banking industry, the Banking Code Compliance Committee. The code compliance monitors collect details of compliance failures and publish their findings on the website. The monitors can also consider a complaint against bad behaviour by a bank. But if we look at the process, we see obfuscation and abuse. The banking code applies to every lending agreement between a bank, a small business, primary producer and consumer. It is part of the lending agreement. Therefore, if you are a borrower, it is part of your contract with the bank. It is a legal document that binds the bank to act in defined ways. However, amazingly enough, this code is not provided to you before you sign the agreement to borrow money. Now, ASIC has provisions hidden deep in its multitude of regulatory guides that says you only have to be made aware of such document and that it exists, and you can get a copy if you ask. One wonders how that satisfies the conditions of fair contract negotiations. Without the code, you cannot be sure that the bank is acting correctly and has complied with all legal obligations. There is no reason why the bank should not provide a copy of the code. The only explanation is that it deliberately intends to keep borrowers in the dark. So you're not aware of the bank's obligations to you. Now, this would breach the Australian Competition and Consumer Commission's requirements that all the fine print be disclosed before reaching an agreement. It can be clearly argued that that in itself is a breach of contract. It can be argued that failing to disclose the obligation clearly shows unfair contract practices. The code becomes essential when your relationship with a bank breaks down. And it's worth noting that in recent years, the number of complaints against banks has been up to 1 million per year. While most of these complaints are rectified quickly, the concerning issues regulate to genuine disputes and situations where bankers have the power to impose penalty interest and invoke legal processes. The bank is quick to demand that you comply with your obligations, but not so quick to honour theirs. This is evident when dispute resolution becomes problematic. The Banking Code is specific in its requirement for the banks to provide internal dispute resolution processes that comply with the relevant Australian standard. Now, you may not have known that. And why would you not have known it? Because it's not provided to you in the information in the Code of Banking Practice. Now, that's an interesting thought, isn't it? The bank, it's a multi-step process that the banks have to comply with that concludes with the bank making full restitution if it has acted incorrectly. But it doesn't do that. Therefore, the bank is in breach of the ASIC-approved Banking Code, which is the key component of the lending agreement. When the bank violates the contract, it has broken the law, and we have seen ASIC take no action. Are we surprised? No. Banks make regular statements to the Banking Code Compliance Committee about the breaches of the Banking Code. The Banking Code Compliance Committee adds them up, notes the total, publishes various examples on their website, but what happens? Nothing. In 2023, banks voluntarily reported 29,647 breaches of the code. Each is a breach of contract, and ASIC, again, choose to ignore this law-breaking activity. Then, despite being in breach of contract, the banks use their massive legal strength and power imbalance to prosecute borrowers who may default. You can make a complaint against the bank to the Banking Code Compliance Committee, but the BCCC has rules deep in the code that limit what they can hear. The rules also set limiting timelines for making a complaint, and they give them the right to not even listen to your complaint against the bank. In addition to that, there are steps that the bank can take to stop the Banking Code Compliance Committee from hearing your complaint. The banks effectively control the BCCC. It operates under bankers' rules, so again, nothing happens. Everything is biased in favour of the banks. So where do you go next? Banks and the ACCC and ASIC are quick to suggest going to the Australian Financial Complaints Authority. What happens at the Australian Financial Complaints Authority? Like the BCCC, AFCA has timelines and rules that limits access to its services and the actions it can take. If the bank is found to be wrong, you will not receive restitution for your loss. You will only receive a limited compensation payment, and then it's over. Nothing. AFCA has become, or one could suggest, was planned to become the get out of jail free card for banks. AFCA processes assist the bank even when it has broken the law. This is banking self-regulation in action. It has failed and the government does nothing. What are the regulators doing? The answer again seems to be nothing. They know about the banking failures right up to commissioner level, and I can attest to that because I've spoken to them. But they fail to act. We can ask the same question following the recent Banking Royal Commission. Governments promised to introduce all the Commission recommendations. The banks tightened their lending, the economy slowed, the government chose to back off. Nothing happened. One must ask, are banks a protected species, or is there another reason why politicians refuse to rein in the banks? What about conflict of interest? Almost every politician has some banking arrangement. Most have home loans, and as we heard recently, many have investment loans. That is just how it is. But does being in debt to a bank create a conflict of interest? One should ask that question. I would love a hot media investigator to ask that directly of a few members of Parliament. Could enacting control legislation on banks create a backlash? More than once, bankers have used their power to disrupt the economy. Imposing hardship on individual borrowers is common, and the banks keep closing branches despite having promised not to do so for, 24 years now, I think it is, since they made statements in the Parliament. The poor banking experience of thousands of Australians provides clear evidence that banking self-regulation has failed. Bankers, bureaucrats and politicians would have us believe banking code of practice is enough, but it is not. The banks ignore it and the regulators have proved themselves ineffective. But the Citizens Party has a solution and an appropriate policy. Enshrining the banking code of practice in legislation and thus ensuring compliance is an appropriate action and good policy. So thank you. There is no doubt that consumers, primary producers and small business owners will applaud this action. There was a time in Australia when banks supported their communities and the local bank manager was a respected citizen. Indeed, in times of regional crisis, the local bank manager usually led the committee or working group to help put things right. Finding a bank manager today is next to impossible. They've changed his title, the chief executive. He sits on the 35th floor of a glass and chrome building and earns nearly $10 million a year. He is impossible to reach. You can't get past the security officers at the bank reception desk. No longer is he a man of the people. Banks are too powerful. We need an alternative. A people's bank delivered through licensed post offices is a necessity. You can still find the local postmaster. The person is respected. He's the individual who in fact, will identify you in your passport application. Communities need access to cash and local access to essential banking services. A people's bank operated through your local post office is a ready-made answer. The community, primary producers and small businesses in regional and rural communities need this service. Australia needs an independent banking service that is not beholden to the present banking cabal. The small business community will fully support the proposal for a People's Bank. The People's Bank cannot come soon enough. Thank you.